Crypto Kids, welcome back to another video. Bitcoin is not doing too much today, but that's all right. We're going to be looking at the next 48 hours for Bitcoin because within those 48 hours, Bitcoin will likely have the most amount of volatility it experienced in the past 2 weeks. And this is because we'll have, firstly, not the FOMC event, but we'll be having the Hong Kong spot ETFs launching tomorrow. Now, people are overhyping this like crazy, so I will be debunking it and try to explain as much as possible why this is bullish for the macro, but in the short term, it will probably not be doing too much for the markets. In fact, FOMC will impact the price more so than the Hong Kong spot ETFs, and this is going to be taking place Wednesday night in Dubai time. I will be live streaming this as a whole, so the entire event, the interest rate announcement, and yeah, basically the whole shebang. So turn on the notification bell. This will be pretty big. In fact, it's probably going to be the biggest FOMC events of all time, period, in like the past, let's say 1 year, because inflation is rising. Inflation is rising while there is high interest rates. People can't pay off their credit card debt. People can't pay off their houses. So we are in a very tricky situation. But apart from this, we have a couple more breaking news regarding the ETFs, regarding Ethereum, and of course, macroeconomics to end things off. So stay tuned, subscribe, turn on the notification bell, leave a like on this video. That would be super appreciated. But as usual, let's start off with the short-term analysis for Bitcoin. Then we'll go into the macro analysis. So on the 4-hourly time frame, Bitcoin is creating lower highs. This is not great. I mean, we had the rising wedge for Bitcoin. We had double top at the $66,000 resistance level, and we broke down to hit the first take profit of this rising wedge. Now, usually how rising wedges work, they break down and they have multiple take profits. So the first one would be at this support at 66K exactly, and then you could put another one at 64.5, and then another at 61.7, and a final one at 60.1. This is just to teach you how a rising wedge works. You usually you can put multiple take profits at different support levels, and a trailing take profit would be the best in my experience to use for a rising wedge. Now, in the past video, we discussed this line of support and of course the one below if 61.7 broke towards the downside. We can see here that in the past 8 hours, Bitcoin did touch it exactly, hitting 61.7K. Now, in the short term, Bitcoin is trying to form a falling wedge. So we had a rising wedge, which is bearish, and now we're trying to form a falling wedge, which we're trying to right now break towards the upside. Are we going to break towards the upside? I think, we will definitely see it in the next upcoming few hours. I'm not going to be trading this, even if Bitcoin does break upwards. Because I think the FOMC event will be so volatile that I'll just sit back and observe. I'm already in a long position since 43K. At this point, I'm not planning on entering new trades until I see some sort of confirmation. But if you are a scalp trader, then I think if we break up, we'll probably go up to 64.5 and the market will wait for FOMC. But just keep in mind that volume is incredibly low. And volume predicts price. When volume is low and the price is in a downward trend, usually price can drop even more. I'm just waiting on the daily time frame for Bitcoin to form actually a double bottom. I think in this scenario, a double bottom would be so perfect. Maybe if I remove everything, it's going to be more clear to see. So if Bitcoin manages to form a double bottom, we come down to 61.2K. Then we bring back ourselves up towards this neckline, retest 66.7 again, break towards the upside. I think that would be a confirmation in my end that Bitcoin is back into bull mode. But if this does not happen and Bitcoin reverses and continues reversing downwards, that's the point where it's going to be getting concerning. We've already retested this 2015 support line. So that's super bullish if we keep it up. If we break it, that's the point where I'm going to say, okay, this bull market is over. That's the make or break point. If Bitcoin, after testing it, continues rising, then I'm expecting a 100K Bitcoin. We can see here in this bull flag slash bullish pennant, we've almost come down to the support. So Bitcoin really has to create a double bottom here, break above this neckline, test this upper bound resistance, and then continue on to make new all-time highs. That's the ideal scenario. The moment we break below from this support, then it's game over for Bitcoin. Then we could be even expecting a $50,000 Bitcoin. Of course, we have a couple of support levels in between, but $50,000 is where we saw major support for Bitcoin all the way back in February of this year. So that's what I'm looking out for in terms of the macro analysis. But Ethereum is super interesting because Ethereum went down all the way to $2,800. Now we're back to 3.2K. And this is because of the fluctuations in news for the Ethereum spot ETFs. That's coming up in May 23rd. As a matter of fact, we can put a vertical line for May 23rd because that is when we're expecting the spot Ethereum ETFs to hopefully be getting approved. But unfortunately, it is looking highly unlikely due to the latest news about Ethereum being classified as a potential security that the SEC has been kind of investigating since March of 2023. That's not a good thing. Eric Balchunas is not expecting an approval for the Ethereum ETFs this time round. In fact, even James is not expecting an Ethereum spot ETF approval. Both will be expecting lobbying from all the big institutional firms. And in 2025, it is more likely to see an Ethereum spot ETF approval, but they do still have like a 25% chance of these actually getting accepted on May the 23rd. I just wouldn't be getting too excited for it, to be honest. I think if Bitcoin follows the S&P, it would be super good for us. We have earnings week this week, so all the big companies, Apple included, they're announcing their earnings reports. All the tech companies are 80-90% reporting bullish earnings, and that is what's pretty much driving the S&P towards the upside. As you can see, the S&P 500 had a dip, so we did have this correction on the weekly time frame. If we go to Bitcoin's weekly time frame, we're seeing that similar correction after a large upwards move. So I would say Bitcoin and the S&P 500 are relatively similar in terms of price action. The important thing is, will Bitcoin be able to bounce like the S&P 500 is doing, or will Bitcoin be trapped in this bearish momentum and kind of break its correlation with the S&P? I do have a metric that is suggesting that we could be potentially following the similar trend with the S&P. So stay tuned until the end. You do not want to miss the macroeconomic updates. The reason why Bitcoin is seeing a smaller push towards the upside is because the Dixie is falling. Remember, we talked about the bearish divergence forming on the daily time frame for the Dixie and how the Dixie, so the dollar value, tends to decrease pretty fast and pretty severely after forming this bearish divergence. Bitcoin is inversely correlated with the dollar index. So if this continues falling, then Bitcoin will have an increase in the shorter term time frame. But the FOMC, starting off with the FOMC, it's going to be pretty important. As I said, we have the inflation that's been continuing to go up regardless of how high the interest rates are continuing to stay. So there would be one particular thing that I'd be looking out for during this FOMC conference. And it's that if the Fed chair will hint a possibility of interest rate hikes. If the market gives any sort of sentiment that the Fed will have to have interest rate hikes to reduce inflation, then expect every single market to correct. Now, looking at the Hong Kong spot ETFs, why is this not as bullish as everybody's predicting it to be? People are expecting hundreds of millions of dollars worth of inflows. Now, a couple of weeks ago, I was super bullish on this particular news until we found out that Chinese local investors are not able to invest in these ETFs. We were so bullish because we thought that Chinese locals would be able to buy these Hong Kong ETFs, but that's not the case. It's pretty strict. And the entire Hong Kong ETF market is worth $47 billion. If we go to the US, the entire Bitcoin holdings through institutions, like only Bitcoin holdings, not like gold or anything, just the amount of Bitcoin held by institutions, by BlackRock, Fidelity, etc., is equivalent to the entirety of the Hong Kong ETF market. So we're not going to be seeing crazy inflows. It's not going to be happening. In the long term, super bullish. I mean, we can see that even in Australia now, we're trying to see these ETFs get approved and launched. We're trying to see it in Singapore, which would be fantastic. Like Singapore would be next level. But we know that the entire ETF market in Hong Kong is actually smaller than the entire Bitcoin held by institutions over in the US. So don't expect anything too crazy. And the Bitcoin spot ETFs, by the way, speaking of ETFs, over in the US, BlackRock has not been accumulating any Bitcoin for the past 3 days consecutively. Is this bad? Why is this happening? Well, the first thing is first, Bitcoin has been consolidating. Bitcoin has been choppy. And the only way that the ETF issuers purchase new Bitcoin or sell Bitcoin is when there are new shares required to be created or shares are required to be destroyed. Now, why does that happen? See, the entire purpose of an ETF is to track the price of the spot commodity. So the ETF is going to try its best to follow the price of Bitcoin in spot. And to do this, it's kind of like think of it as like a Bitcoin mathematical mechanism where you adjust the how tough it is to mine Bitcoin. It's a similar thing. If there is excess of demand for these ETFs, let's say so many people want to buy IBIT in simple terms, then what BlackRock has to do with the APs, the authorized participants, they need to create new shares, right, to kind of match that demand. And to create new shares, they need to buy more Bitcoin. The same thing goes if Bitcoin goes down. If a lot of people want to sell their IBIT shares, then BlackRock will therefore destroy shares and then sell Bitcoin to compensate for that. That's how the entire system works. If Bitcoin goes up, we will see inflows. If Bitcoin goes down, we will see outflows. It's more likely to see inflows compared to outflows because it is a new ETF. But keep in mind, yesterday, there's around 3,500 ETFs all across the United States. 2,903 of them had exactly zero flows. So it's something completely normal. Do not be scared. Yes, if we do see outflows from BlackRock, which would happen if Bitcoin sees a crash towards the downside, if that happens, then BlackRock will experience outflows. It's likely. And will the market panic? Yes, the market will likely panic. If Bitcoin falls below 56K, then it's like 52, 50K. But if 56K holds, then it's like the final buy the dip opportunity. So I would be looking out for that. Really, it's just how ETFs work. So nothing super crazy to be concerned about. So the ETFs are coming to Australia. That's amazing. I'm not exactly sure how big the ETF market in Australia is. I really don't think it is a huge market overall. We can see that Asia Pacific is $233 million. So I really don't think it is a massive market, but still, whatever inflow we do see is something, right? It's profit. Now, if we do get an ETF in Singapore, that's when things get interesting because it is the biggest financial hub in Asia overall, but this is still in the very early stages. If there's any development whatsoever, I will be alerting you over on the CryptoKid channel. In terms of macroeconomics, we're seeing that the M2, so the amount of money in circulation, alongside the monetary base, the total money that people across the US have, including the loans of banks held at the central bank, if I'm not wrong, this is going back towards the upside. So in 2021, November, the amount of money in circulation was at an all-time high. Coincidentally, that's also when the crypto markets was at an all-time high. The money circulation going up means that evidently more people have more cash at hand, so they can make more purchases, right? But I think it's a bit skewed. I think this includes the banks more so this time around compared to 2021 in terms of how much money is held in these institutions. So the monetary base going up means that people have more money, hence they will likely invest their money into the stock market. But as I said, I don't think this is the people particularly. I think this is the banks. And the reason is like 43% of small businesses in the US are not able to fully pay their rent in April. And that's the highest since March of 2021. Delinquencies are across restaurants were 52%. And it's just going to crazy amounts. And to me, it's looking very close to what happened in 2008. We're seeing the median sales price of houses increase by 60% since 2014. So in a time where median price houses are increasing, at the same time where new home supply is also increasing and in fact is at the highest level since 2008, because homeowners are forced to sell their houses because the renters are not able to pay rent, right? And people just can't afford any of these things. So I think we're going into a massive bubble, similar to what we saw, the same, but not the same since 2008. And I think we're just going to have a huge crash. And if we do have a huge crash, then Bitcoin will also have a huge crash. It's going to affect everything. There's no exception. It's just that Bitcoin and gold will probably recover the fastest. So if you do want to keep some cash on the side, of course, nothing in this video is financial advice. I'm doing it, like 20% of my portfolio is in cash right now, just in case we see a crash in the markets. I will take that opportunity to buy as much Bitcoin as possible. But of course, this would be a huge external event. If we look at what's happening with Bitcoin, it's unlikely. But if the economy continues going in this way, if national debt continues to increase, then it's just going to be inevitable. But guys and girls, thank you so much for watching this video. I hope you enjoyed it. It took a lot of research. It's like 12:30 a.m. usual for the Crypto Kids squad, but hey, I like the video. I hope you liked it at the same time. Let me know in the comments section down below if there's anything in particular that you would like me to take a look at tomorrow or the day after. I will probably make a video definitely for the Hong Kong ETFs, and then we'll go live for the FOMC. So I will be waiting for you guys. Have a great day. Take care, everyone, and I'll see you all very shortly. Bye-bye, guys.